Inflation in Japan continues to cool, keeping the country's central bank on a cautious stance as it attempts to tighten monetary policy gradually. Here's Elizabeth Nyo with more.
Consumers in Japan saw another month of slowing price increases in April, an inflation trend that may complicate the central bank's rate hike plans. A core consumer inflation decelerated to 2.2% on-year last month. The data, which excludes fresh food, is at its lowest level in 3 months. Overall, consumer prices in April also eased to 2.5% on-year. Those latest figures track slower increases in food and hotel prices. Consumer price gains still sit above the Bank of Japan's 2% inflation target, but the slowdown highlights uncertainties on whether consumption and wage pressure will strengthen enough to keep price growth sustainably around that level. And that will play into the BOJ's calculations when they meet next month to review monetary policy. But one analyst tells us the central bank has enough room to tighten policy.
There's a consumption boom in Japan, we think, that is taking place and is likely to run many, many years. And this is clearly putting upward pressure on inflation. The weak yen clearly has an effect as well, but at the same time that is supporting exporters. So yes, I do think the Bank of Japan has the capacity to tighten monetary policy. For example, we're calling for a 10 basis point hike both in July and December this year.
Remember that the BOJ in March scrapped its negative rate and shifted towards policy normalization. Rising consumer prices and wages had led policymakers to judge that their price stability target is within sight. One of the key components of that long-pursued 2% inflation goal in Japan is to achieve a virtuous cycle in which wage growth feeds into demand-led price gains. But it's cost-push pressure so far that's been keeping Japanese inflation above target, not robust demand. And the yen's recent depreciation has been fueling concerns that cost-push inflationary pressures may stay in Japan for a while. The weak currency has been pushing up prices of import goods, undermining shoppers' appetite to spend. A sluggish consumption has, in turn, taken a toll on the whole Japanese economy. GDP growth shrank at an annualized pace of 2% in the first quarter, now throwing a fresh challenge to the Bank of Japan's plans to tighten monetary policy.
There was a temporary disruption to the economy, or to growth more broadly, in the auto sector. Q1 growth came in at 0.5% on a sequential basis versus 0.6% expected by the market. So there was a modest miss. We anticipate the economy will grow by around 0.5%, 0.6%. This year, and actually double to 1.2% next year. And it's been a while since we've been able to talk about a doubling in growth in Japan, albeit from low levels.